What's going on, guys? Welcome to Traders Trenching. Trading trenches trading. I got these two interesting stocks that I want to bring to y'all's attention that I'm watching. So the first one here is going to be PLTR, Palantir Technologies. So Palantir has earnings this Monday, tomorrow, after hours, and I think it's gonna be an interesting report, to say the least. So as you guys can see, price was rejected here in August, late August, mid of August, August 12th, and then price fell. Then price came up, got rejected again, fell, came up here, got rejected again, and then finally, just this past week, right, price finally found support above this 189 or 190 area, and now price is above this zone. Palantir is about to report earnings, and I think they're going to meet or beat expectations. And so I just want to go over where this thing could end up. So there we go. All right, so hit TP1, right? Price hit TP1 this past Friday. This was October 31st, Halloween, right? And then price closed there, right? Didn't really pull back too much. And so what I think is going to happen, honestly, I think after they beat earnings on Monday, I think by Friday, if not by Tuesday morning, I think price will jump up to this next area here around 219. And then eventually, I think Palantir will just continue up in this uptrend, maybe ending the year at 237 or even higher. Is because of what Palantir is doing here. So I just want to zoom in right here where it says profit margin. So we see Palantir has a 22% profit margin, which means that for every dollar they earn in profits, they keep 22 cents. Or for every $100 that they earn, they keep $22. And then over here where it says sales Y/Y year over year, TTM, trailing 12 months, this means the sales over the past 12 months, you see it's at 38%. So what that means is that from last year to this year, every $100 that Palantir made last year, they're making an extra $38 on that this year. And so for these specific type of technology companies, they go by what's called the rule of 40. Okay, and the rule of 40 essentially says that when these two metrics combined are over 40%, then that is considered a great company. And if you do the math here, 38% and 22%, you'll see that this is actually 60%. And so Palantir as a company in general is doing amazing. All right. They also got an upgrade here in August for 160, right? And there was one in July, overweight, and basically they have surpassed all these price targets, right? The highest one being 170, and price is currently sitting at $200. So they've beat their price targets by these reputable analysts. They've surpassed the rule of 40 by 50%, and they're set to report earnings on Monday, tomorrow in the afternoon. So not only do I think price is going to surge intraday tomorrow, but I also think it's going to surge for the rest of the week. All right, so here we got the options chain pulled up, and we see that the implied volatility is 112%, and there's a $21 up or down move. So essentially the market makers think that Palantir this week is going to move $20. And I happen to agree with them. And so I just want to look at some options and see if see how we can play this move, see how I can play this move, and perhaps if any of you are going to join me in that. So the most conservative play would be just to get right here at the money, these 200 calls for $10 and about 90 cents. These are, however, a bit on the expensive side if you have a smaller sized account, right? $10.90 equals $1,090 in $10.90 premium equals $1,090 US dollars. And so we're gonna, we can play this in a different way. We can go out the money, right? So here's my thinking. The expected move is $21. So why not go $20 out of the money and check out these 220 calls? All right, so these 220 calls are going for about $4, which is a lot more affordable than the $200 strike. And I think buying these before they report earnings and then seeing basically what happens intraday would be a good way to make some profits. You could also hold through earnings, which is a lot riskier. That's probably the riskiest way to play this. The less risky way would be to wait to see what happens during earnings and then hop into a contract Tuesday if they beat or meet their expectations. Just really depends on your outlook, your risk tolerance, your account size, and all that stuff. You could also do a spread, right? Like you could buy the 210s, sell the 220s against it, and pay $2.88 instead, where your max profit would be about $7. So there's that option. That's PLTR. This is a more aggressive way, right? There's only 5 days on this expiration. If you wanted to play this a little bit better, you could go out to November 21st, and you could still buy those 220s out here for about $7. If you even want to go a little bit further out the money, I suppose you could get the 225s or so. I wouldn't go too much past that, but that is an option.